Hi y'all. I've got some updates on some indicators that will be, or in the process of getting installed into Helix, but they're independent, and so I thought I'd just display them here and show you what they're going to do. I'm going to put them on the web page. I think TRivots already is there, but anyway, TRivots is just nothing more than pivots. We just changed the name because somebody suggested that, and I thought it was pretty good. But in any event, what we have here is we have two data series A. Let me start at the top here, the look back period. We brought it down to 2 because there's so many pivots that it just will bog it down. So it's not really necessary for day trading. So I found 2 hours is good enough. I put on 8, but it just takes a little longer to load up. I think 2 hours is sufficient for what we're doing. So two data series A and B, they're basically identical. You could pick your type of chart that you want. I used the 13.2 and the 34.5. So I'm just going to plot one for right now. But so what it does is you put in your time frame. If you were going to put in a minute, then you would use this one here. I used the Ninja Ranko. The support and resistance line is the let's just use this one for an example. So it's gonna, this is a resistance, so it's going to stay solid until it's broken. If price gets up there, then it'll break it once it breaches 20 ticks. I have it set for 20 ticks. Because if it just goes by a 1 or 2 or 3 ticks, is that really a breach? That's just a little overshoot. So I really wanted to kind of really break it before it then it turns to a broken line. So right now it's going to stay solid. This is another one here. It'll stay solid. Then if it does happen to come back down, so let's say it breaks it and then it comes back down, you can see it right here. It broke it right here, and then it had a small blue because it turned blue, but then it went right into the termination period. So if there's a break of 14 ticks right there, once it gets 14 ticks, then it'll stop painting the blue. So we make that longer. You can make it shorter. And then when it does do that, you don't have to have the termination bars there at all. This is based on the bars of the primary chart. In this case, I'm using a 34.5. So it's going to plot for 20 bars of this chart, the orange. And that just shows you that, yes, it's broken and it's about ready to fall off and stop. So if you don't want that at all, you could just change it to 0. If you want it to be really long, you can make it longer, obviously, depending on how many bars you want. So then you've got your colors, of course, support, resistance, and all that. And then the plot line, the width. Now, if you notice, by default, we have Series A as 2 in width, and this one here is by default 4 in width. So right now I'm using this one. It's plotting this one here. So you can see it's a little thicker than if I were to plot this one. It's a little thinner. So it just tells you which chart you're on. So it might be too confusing, too many bars if you have 2 on. You just take them by strength in essence. So right now I'm just going to show this one. So I'll just let this go and you kind of see how it will fly here. The reason why I'm picking this time frame, because I know there was a big down period for an hour on this day to go down, and then there was at 10 o'clock it goes up. So you can see these have not been broken. It goes down, these have, and they've turned red. You probably can't see it because it's already on there, and I just have it set for a short period of time, and then it terminates off once it's broken. Here's some new ones here, and you'll see here that you'll start stacking up some resistances and you'll break some blues or vice versa. But the point of it is that when you start noticing these holding, so these have held, and when you start seeing 4, 5, 6, 7, 8 lines up here, it's pretty powerful. And when you break it, then you sometimes I've seen it really break with force. All right, so let me just run this here. So the reason why I have this termination bar is because once it's broken, it doesn't just go away. It usually pulls back to it. See it time and time again. You can see it right here. It broke it, and then it pulled back to it, and then it goes down. It broke it right here. You can even see a little tiny wick here, and there's a little tiny wick there. It tries to pull back to it. It comes back, pulls back. So you just see this all day long. And once it breaks, it pulls back to it. Like right here, it broke it. it comes back to it, it comes back down again, and it just keeps going and going and going. So you can see how we're starting to stack up with a lot of red lines. And so we're gonna break through them, but you could always count on, if I were just to do a first glance, I would say these are going to be a little stronger. You're going to get some hiccups at these areas, you know, maybe a little bounce, or you might see a little wick or something like that, but it's trying to push through them. But once it finally gets some momentum, it'll break through them. But it's still going up. It's going to break through, come back down, and then break up, so on and so on. Now, once we break this one, you've got a little tradable void, you got a little tradable void here, and you got a big tradable void here. Well, I think you got the idea on this one, but you could see that if you get a lot of red up here and a lot of blues down there, you're just in a chop area. So, but this gives us an idea. And of course, Helix doesn't need to plot any of this. It'll see where the data is, and then it'll work appropriately based on what the rules are. So let me stop it there, and we'll go to, I'm just going to rewind it and do the same area, and I'll show you the next indicator and what that one's doing. All right, so this one here, I'm calling Helix Trend 8.0, and then there's 8.1. There's a rhyme and reason to these labeling for Helix, and try to keep it organized, but needless to say. So this is nothing more than the high-low type of, we all know higher highs, higher lows, and et cetera, and this basically just identifies it for us. So we could use wicks, but I'm just using the body right now. I'm going to use the primary charts, and if anybody knows me, I like to use synthetics. I've been using different minute charts and, you know, different higher time frames and whatnot, but for right now I'm just going to use the primary chart, which happens to be a 34.5 Menzarenko, and so that's going to be that one right there. So this one gets skipped, and then I'm going to plot the entry zone. Now the entry zone, I'll tell you a little bit about that once you see it, but you'll see the different colors, the blue and the light salmon. And I have it a little shaded, you know, there. And then tread line, you could put the length. You'll see a tread line here in a minute. I probably should have turned it on first. But anyway, you can plot the arrows or not. You can plot the text, etc. And then a reversal pivot is going to be the yellow one. So if you have a higher high, higher low, higher high, and then you don't get the higher high or the higher low, you'll see it'll say REV there. And then if you want the audibles, you can put on audibles. You don't have to have those. You just disable them. And that's really about it. Okay, so you can see the REV, how you got a higher high, higher low, and then you don't get the higher high, so you got a reversal down. And the same thing with the low. You've got a lower low, a lower high, but now you don't get you get the break there. So with these entry zones, they're just more of a warning, is when it actually takes place. So let me see here with the lines. So the bars are the actual triggers. So you can see here you've got a lower low, you got a reversal, then you got a lower high, I'm sorry. Then you got a lower low, you got a lower low here, a lower high, and so that triggers right here on this reversal bar, because of the fact we didn't breach this here, and we're lower than this lower high, and as soon as we get the reversal bar, that creates the pivot, which then says, okay, this is a trend scenario. And then also here too, because you breached it there. So for instance here, you got the higher low from here to here, and you've got a higher high. So you've got a higher high here, a higher low, and here's your warning. So if we were to break above this higher highs, you would have a confirmed higher high. So you'd have the higher high, and then a new higher high, and then a lower, but unfortunately we didn't get it. So this warning never, if you notice there's no bar like over here, it never comes to fruition. It fizzles out. It doesn't happen. It just gives you a warning that, hey, you're going to get it. If you breach this right here, if you breach this, you're going to get a bar. Like for instance in here, lower low, lower high, lower low, lower high, and as soon as we get this, we're going to know that we have a pivot that's lower than that one. So here's your warning, and this didn't plot until it actually happened, and once it happened, then you got it. If this would have just kept going up and up and up, this little zone would have stopped, and we would have been above that, which would then you'd see an REV because it's no longer in play. But you've got the bar actually because of the fact that it actually did trigger. So that's all this one does. I could just play it here. And this one, as I said, has an audible. So we had, if you notice, we had one here, and you heard the warning. Maybe you didn't hear the warning, but it had a warning. I heard it. But there you go. I don't know if you heard the warning or not. But anyway, so here we go. So we got a reversal because we broke this low. We got a higher low, higher high, and now we have a higher low. If we break here, we're going to have the bar. If we keep coming down, then this is just going to fizzle out. And there it is. You see we got the bar, the actual entry there. So now the question is, how do you get in? You could actually put your order right there, or you could wait for the pullback. And obviously other indicators will play a role in here. So, but anyway, following the story of higher highs and higher lows, this just helps you out and tells you what it is. So let me go to the next one. So this one here is my trend 8.1. This basically counts the crossovers, if you will. These are, they kind of go hand in hand with other things and other rules, but needless to say, this is the basics of it. So I'll just give you if anybody's have been involved with next gen T3 or knows anything about next gen T3, there's a lot of companies out there have different trigger lines for different things, but these come from next gens. I've been with them for gosh, over 10 years. Definitely an advocate of them. So if you want to talk to me about it, by all means, give me a call or whatever, reach out. But definitely they got, great education and all that. Well, anyway, I got this from them. And so what it is, you got the small trigger lines here, and you got the bigger trigger lines here. You don't have to plot them. If you wanted a cleaner chart, it's not necessary. I mean, Helix has some things inside of them, so it's not necessary. But I'm just going to plot them to show here. And then going down here, you've got your trend line, which will actually plot right here for longs or shorts. And you can make it longer, shorter. And the same thing if you want it thicker or whatever. You can pick your colors. And then the text size I have nice and big here. And then you've got alerts here too. It's easy enough to put it in there. Whether or not you use them is here nor there. And so that's it. So what this is going to do is it counts how many pivots we have. So for instance, we have, let me explain first of all what it counts. You have to have the small trigger going in your direction. So that's right here. So you see the small trigger here, and it converts and it goes up. So that's one, and not necessarily in this order, but that is one of the rules, the 3 rules. You got to have it going up. The large trigger has to be going up, and it has to cross over. And what I mean by cross over, we call it a gap. And when we cross over, that means the small trigger set, if you will, crosses the large trigger set, and it creates this gap, and that's the strongest part of the move. And so that's going to be counted. Now it's a long here, so we're going to use the blue 3. So that's the third one. And what that means is it just counts it. So let me go back to the first one here. So here's the first one because it broke the set, and I'll tell you how it breaks and starts all over again. But needless to say, so here's the first one here, and then you got a down, and then you got a second one here. And it depends. Now, as I said before, there's 3 conditions: the small, the large, and then the cross. So, and they might not all happen at the same time. So whichever one it happens on, the line will show it. Like in this case, the last thing was the crossover. So it plotted the line here. In this one, you notice the crossover was earlier and the small triggers, but the large triggers were the ones that were a little slower. So that's the last, so it's the last one. So the line goes there and so on, kind of simple. So anyway, we come down here, or we're going up, I should say. So we're going up here, we come down. Let's forget the shorts for right now. I can probably just turn those off, but that's all right. You'll see through it. Now you see here's our third one, and actually we got a fourth one. And what I've come to realize, and the reason why this is set up, is 1s and 2s are the best. Because once you start getting into 3s, 4s, I've seen 6s and 8s. If you've got a strong momentum, that's fine. On a higher time frame, you're good. But if it's just your normal run-of-the-day mill without any, Trump tweets or whatever, then it's, you know, I kind of like would stay away from those. And you could even see them here in history that they don't produce as much. So when it comes down and breaks two, the prior two, then it will switch to a 1 again. And now, and a lot of times you'll see it come down, and here you go again. So here's a 1, here's a 2, here's a 3, and the reason why it's a 1 because it broke these two right here. Let me turn off the shorts just to make them a little easier. Hold on. There we go. So I just made the shorts transparent just for ease of doing things here. So needless to say, so that's basically how it is. I know that this is going to, oh, I should have turned on shorts. Let me flip that around. So I'm just plotting the shorts only. And again, these are all things that Helix sees. You don't need to plot any of this business. You don't even have to plot the trigger lines. I don't know if you heard the audible or not, but it will trigger when it gets a 2 or 3 and so on. So look here. So here's your first one, and you get your biggest move. The second ones are, you know, okay too. I wouldn't rule them out. But now you start, here's the third one, okay, to go short. It just needs to come back more. So it still can go down, and I know for a fact this will, but it's just going to come up. And if you notice, it came up, broke these two here, and now it gave you a new 1. Now, because we came back deeper, now you can see it's going to have a better, stronger move. Now, they still could lose, don't get me wrong. I mean, this is not 100%, but this is just one idea. But let me come back into here and go to here. I'll put the blues back on because we're going to start getting into our long. And yeah, I could turn. You know what? Let's turn off. Our trigger lines because they're just in the way. We don't need to see them. I'll leave longs and shorts on, I guess. You're just gonna have to, you know, you look through them, and again, Helix kind of is gonna look through them. So now we're gonna start going up, and I don't know if you'll hear it there. And as I say, 1s and 2 are always the best. So again, I know what the market's going to do at 9 o'clock and 10 o'clock on this date. So you have to look at it with a grain of salt. Again, this is no indicator that's it goes with, it's just supplements. Like everything, there's so many other supplements that just give guidance. And this is all going to be, or in the process of being put into Helix, because these are just things that it needs to count. So we can go in there and say, we want our trend to only take 1s and 2s, or, you know, minimum of 1, max of 2, you know, mins and max kind of thing. So you go in there and you say, I only want a max of 2, and therefore it'll give you 1s and 2s, but it'll just bypass 3s and 4s, which you'll miss some, you know. But again, if we're looking for the better ones, and you're only looking, if you're going to go automatic on it, and you only want that. Now you could throw other indicators on here, and there's a zillion other indicators, but let's throw on this one here. Let's throw them all on here. I mean, now you can see how overloaded you're going to get. So this one here, I'll just leave it on. Let's just go on with it all. Okay, you can see it gets a little crowded here. But now that you know what they all are, you can kind of see. So this one never came to be. It reversed. The higher high. It looked like it was going up. You had some bunch of support down here, but you know, it never came to fruition, so it didn't work. Looking on that indicator. So now you're starting to see you got a lower high, you got a lower low there. So you could kind of start to see that, hey, and if we break through, we got to break this one, this trivet here. If we could break that trivet, and then we're going down, and we have to break this because we got to get a lower low. And we don't want to break that. So if you have a stop, you could put it right there, because if you break that, you no longer have a lower low. If that makes any kind of sense at all. Okay, so you see we got a reversal here because we got it too high. So it's, now we broke this one here. Okay, so you notice also, so now we have one going down here, a 3. So we have our gap, if you will. Our triggers are going that way, and we have a number 3, and we got lower lows. So you can see the possibility of it starting to go lower. Now here's a 2 going that way. So you can see we're kind of in this chop. Okay, so here's your lower high. It's a reversal, got higher, a lower low. This is, if this comes down, it's going to give you a lower high. as long as it doesn't breach this trivet here. And here's our warning right there. There it is right there. So we got lower lows. And we just need this, you know, if you had a stop here, you know, you can put it in different places, but you're going to break your pattern here right now. You just broke it. So there's no point in hanging in. But if you're going to hang out for a little bit longer, you can always stay up here and hide behind all these, because you need to get a little oomph to get through all those. So anyway, that's pretty much it. I'll just let this run for a second and kind of get an idea. Again, there's 3 indicators right here. You got your trivets, which are your lines. You got your, and then they're broken if they break. You got your entry warning with your lower low and higher high and all that business. And then you've got your 3s, 4s, and 5s and 2s and whatever. And that just shows you which way. I didn't put the trigger lines on here, and you can see you don't really necessarily need them. But that's what's creating them, just so you know. So we broke this one here. Our pattern's starting to set up. We got a 6, which I really prefer not to have a 6, but we broke it. So if we come up again somewhere up here, as long as we stay above this one, because we don't want to get above that, here's our warning. As long as we stay above that, we're going to get a 7. We won't get a 1 again, because you'd have to break the last 2. So you'd have to break this one. Now we have to get a lower low here, because we got the lower high. We have to get, now number 7 is starting to get worn out, but we have to get lower than this, because if we don't, it breaks our pattern. So again, you could actually have your stop right here, depending on where you get in, because if you get a pivot there, oh, you got it. Okay, so you're good. So your stop can technically go up here. Now you got a strong 1 up. So again, those are a little powerful. You got a lower high, lower high, lower high, lower low, lower low, and here we got another lower low. So you can have your stop here now, because if you break that, you break your pattern. And now you got a number 1 and number 2 going up. So you can kind of see we're kind of stuck. I can go a little faster, but anyway, hope this helps. So I'll just let this go and then I'll call it. All right, well, I'm going to call it there. You got the idea. You see, we're getting chopped here. We're not able to break these. And as you can see, when we do break them, you know, it comes down deeper and then it just barrels through them. But we're still having issues trying to break them. So, gives you the idea of what's happening. Now look at all the blue underneath us. So the same thing going down. You can get hiccups on every single one of these. You can take targets at them. If you got a bigger one, like right here, you got a tradable void. These are awfully small. These are only single lines, so you know, probably get a bounce or 2. But these down here, you got a little distance to go. Comment in the YouTube video, and I would subscribe, because sometimes I don't put out emails on these. So if you don't subscribe, or you know, if you don't get an email, or even if you're not subscribed, or even if you are subscribed to the email list, I sometimes don't send out emails, and I just throw them up on YouTube. So if you subscribe to the YouTube link, or you know, follow, and I'll do whatever you got to do there, and you get the notifications, then you'll see the videos if I do any videos. So anyway, I just put out a new Helix version, and I know there's a big change going to come out soon, hopefully in the next couple, well, I say weeks, but sometimes that doesn't happen. So anyway, happy trading.